Today, crypto starts the week in the green. Kim Kardashian shells out over $1 million to settle SEC charges linked to a crypto promo. And Yassine Elmandjra of ARK Invest discusses the state of crypto. Welcome to CNBC's Crypto World. I'm Kate Rooney. Crypto markets rising to kick off this week. By noon Eastern, Bitcoin traded around $19,000, Ether rose to $1,300, and Polkadot climbed to $6. Today's gains come as Wall Street kicks off October with a rally and the value of the U.S. dollar ticked lower. Okay, let's get you caught up on the top stories. First, pro-Russian groups are skirting U.S. sanctions and raising hundreds of thousands of dollars in crypto to fund the war in Ukraine. According to a report from TRM Labs, fundraising groups raked in more than $400,000 since the start of the invasion back in February. That money is being used to fund militias fighting alongside Russian forces. TRM looked at Telegram messages that let people send crypto funds to groups like Task Force Rusich, which has been labeled a neo-Nazi paramilitary group by the U.S. Treasury. Back when the invasion of Ukraine first began, many raised concerns that cryptocurrencies would be used to get around global sanctions on Russia, but so far, very little crypto trading happens in Russian rubles. Next, bank transfers on Coinbase are back online after an outage this weekend. On Sunday, the crypto exchange said a technical issue prevented transfers to and from the platform from U.S. bank accounts, but assured customers that funds were safe. About 3 hours later, the company announced the issue was resolved. Meanwhile, Solana also faced some technical issues over the weekend. That network faced a 6-hour major outage on Friday thanks to a misconfigured node. We actually took a deep dive into how Solana works and what causes some of its outages. You can find that story over at cnbc.com/cryptoworld. And last up, Kim Kardashian agreed to pay more than $1 million to settle SEC charges that she failed to disclose a payment she received for promoting a crypto asset on her Instagram feed. The agency announced this morning that the influencer did not report that she was paid $250,000 to post about EMAX tokens. That's a crypto asset offered by Ethereum Max. The SEC added that the post, pubbed back in June last year, included a hashtag directing people to the Ethereum Max website, which gave users instructions about how to buy those tokens. The agency says Kardashian's failure to disclose the payment was a violation of federal securities law. The SEC says Kardashian agreed to pay that $1 million fine as well as $260,000, which includes the payment she received plus interest, and that she also agreed not to promote crypto securities for 3 years. A lawyer for Kardashian said in a statement that the reality TV star, quote, fully cooperated with the SEC from the beginning. The statement went on to say that she wanted to get this matter behind her to avoid a protracted dispute. The agreement she reached with the SEC allows her to do that so she can move forward with her many different business pursuits. SEC Chairman Gary Gensler spoke to Squawk Box this morning about that case and acknowledged Kardashian's ongoing cooperation. Take a listen.
In this particular case, this was about an influencer, a high-profile celebrity, on their Instagram site putting out a tout for this token Ethereum Max, which is a security we've determined. And so those are the facts and circumstances here, and it's important for the investing public to understand also this is a highly speculative asset class, and so when a celebrity or influence is touting it, it's important that the public understands that relationship and are they getting paid and how much they're getting paid.
All right, on to our main story. Let's turn back to the markets. Yassine Elmandjra of ARK Invest discusses the state of crypto and its new collaboration with Eaglebrook to make ARK's actively managed crypto strategies available to more advisors. Well, let's start off with the news that ARK is announcing today. So, new partnership with Eaglebrook Advisors. Explain what this means for clients.
Absolutely. So we're really excited to be offering now 2 crypto separately managed account or SMA strategies in partnership with Eaglebrook. So these strategies are really designed to meet the need of financial advisors and their clients by offering direct ownership to crypto with low minimums and portfolio reporting integration. So ARK, as the first public fund manager to gain exposure to Bitcoin in 2015, sees this as really a natural continuation of our involvement in this asset class. So very excited to be partnering here.
And so what are the 2 separate crypto strategies and what are you targeting here? What industries is ARK focusing on?
Before we dive into the strategy, I think it's important to understand kind of the implications of public blockchains and how we see this market evolving over time. So we think public blockchains are catalyzing three revolutions across money, financial services, and the internet. The first and perhaps most profound use case really began with Bitcoin in 2009, which we think catalyzed a monetary revolution by introducing this novel form of self-sovereign, censorship-resistant money. It's disrupting kind of the world of fiat currencies and central banks broadly. And in leading this monetary revolution, Bitcoin has catalyzed two parallel revolutions, a financial revolution where public blockchains are now facilitating the coordination of financial services and contracts outside the purview of traditional financial institutions, and an internet revolution where public blockchains are facilitating the coordination of identity, reputation, and data outside the purview of traditional media conglomerates and big tech. So we've effectively formulated our investment strategies based on these revolutions and are now offering it through Eaglebrook's platform. Within the cryptocurrency strategy, which is our first strategy, that captures the monetary revolution, and that's an actively managed, highly concentrated portfolio of cryptocurrencies with Bitcoin as our core position. And within the crypto asset strategy, which captures the financial and internet revolution, we're allocating across four major themes we've identified, which includes smart contracting networks, decentralized finance, Web3, and infrastructure and scaling.
What about some of the price targets at ARK? There was a $20 trillion market cap price target for ETH by the end of the decade. What is your expectation? Is that shifting at all?
Yeah, so we think that across all three revolutions, it's a multi-trillion-dollar market opportunity. We think within the monetary revolution, Bitcoin is likely to take significant share of that. We've sized that opportunity. We think within the next 10 years, Bitcoin could increase from it's roughly $500 billion market cap today to 15 to 20 trillion dollars, which represents between a $500 to $1 million per Bitcoin. And this might sound optimistic, but for perspective, when Bitcoin was trading at $200 in 2015, very few investors would have believed that the depths of a bear market in 2022 would consist of a roughly $20,000 Bitcoin price, up 100-fold from 2015.
And this hasn't necessarily been an ARK strategy, but what is your thought on hedging to the downside? A lot of investors want to be long-term holders, but might want some protection to the volatility and to the weakness in prices we've seen. Is that something that's affecting markets? And is it something you'd recommend on more of an individual basis for investors right now that are dealing with a lot of uncertainty?
It depends largely on an investor's risk appetite. But when we think about innovation broadly, and we're bucking crypto asset under sort of the innovation platform, under one of five innovation platforms, we kind of see innovation as a slice of a broader portfolio. And so the diversification strategy is not really, we're not necessarily saying to put all your eggs in one basket and hope for the best. It's over, longer term time horizons where crypto as an asset class fits within a broader sort of bucket of assets that all present sort of different risk reward characteristics. And over a long enough time horizon, some of the volatility or the uncertainty hedges out by just a function of having exposure to other asset classes. And so that's kind of within a broader investment framework, how we view things. Within the crypto asset framework, we're constantly monitoring whether or not, we are in risk on or risk off environment within crypto. We actually view Bitcoin as a cash-like position relative to other crypto assets. So in a risk-off environment, we will consolidate into Bitcoin as it tends to outperform during risk-off periods. And during risk-on environments, we will sort of distribute our Bitcoin into other, let's call it higher risk, higher reward assets. Right now, we do think that we're in a risk-off period. So in terms of hedging volatility, we've sort of concentrated into that highest conviction name in Bitcoin. But things could change, especially if we see a turn from the Fed.
And finally, Yassine, we're heading into the last couple of months of the year, a few months of the year. What are your expectations for markets And give us a few themes to watch for our viewers. What are your biggest areas of focus as the year closes out?
We've been definitely focused heavily on the macro backdrop, really dictating a lot of the performance coming into the end of this year. Some of the themes that we're looking at right now, the yield curve, appears to reflect a return of the 1980s style restrictive U.S. monetary policy. And we think that the Fed is making a mistake there. I think we were taking also a very close eye on the falling commodity prices, which could suggest deflation in the pipeline. A continuation of the interest rate hikes here is likely and ironically it might lead to deflation. We've seen a lot of commodities that have plunged from their post-COVID price peaks, whether it's lumber, copper, oil, iron ore, and silver. So, we've been basically pricing in a recession here. And I think that the Fed slowly but surely is going to, pick up on that. But until then, we think that there's going to be some choppiness from here on out.
Okay, that's all for Crypto World today, but we'll be back again tomorrow with a lot more. We'll see you then.